This week ended in a loss. But instead of just being upset about the result, I want to figure out exactly where I went wrong and what changes I can make to perform better in the coming weeks. The first problem was breakout trades. If you look at my journal, you'll notice that the risk on my breakout trades is $7.50, while the risk on my range and minor trades is $10. This shows that I already knew breakout trades were one of my weak points. Based on the backtests I've done, even in the best market conditions, breakout trades have around a 50% win rate. Now you might ask, why do I still take these trades? Because these are exactly the trades that create the biggest account growth. Their minimum risk to reward is 2.5, and sometimes they can reach 5R. The reality is that a trading account usually doesn't grow during ranging markets. The biggest growth happens during explosive market moves. My job during ranging markets is simply to protect the account and wait for those big opportunities. That's why I added a new rule. From now on, I will only enter a breakout trade after the breakout candle has completely closed, and only if the setup is an A+ setup. If one of these conditions is not met, I won't take the trade. The second problem was profit management. Several times, I saw the market move close to my target, give me a large part of the profit, and then reverse and hit my stop loss. To solve this problem, I will use two targets from now on. When the price reaches TP1, I will close half of the position, secure some profit, and move my stop loss to an important minor level so the trade can continue without risk. At the same time, I made another change. The minimum risk to reward for breakout trades will remain 2.5, but for range and minor trades, the minimum risk to reward will now be 2. The third problem was where I place my stop loss. Until now, I have almost always placed my stop loss behind the minor structure on the 1-hour time frame. But from this week, I want to use the fixed range volume profile. This tool shows me where the highest trading volume happened. These areas usually have stronger support and resistance, so they can be more logical places to place my stop loss and help avoid unnecessary stop outs. The fourth problem was AUD/USD. This currency pair had caused problems for me before. At one point, I completely stopped trading it. This week, I decided to give it another chance, but as you saw, it almost ruined my entire week. So I need to review again whether this pair is actually compatible with my strategy or not. And the final problem was the time frame. I feel like the 1-hour time frame might not be the best choice for me. I haven't made a final decision yet, but until Monday, I will backtest both the 15-minute and 1-hour timeframes and make my decision based on data, not emotions. Finally, I added something new to my journal that might be interesting for you as well. I call it the daily score. Every day, I record the tasks I need to complete in this table. If I fail to complete one of them, I mark it red and lose 10 points. At the end of the week, I record my final score. Now you might be asking, how does this help with trading? My goal is to answer one question. Can being disciplined and consistently doing the right things actually improve a trader's profitability? If the results are positive after a few months, you can use this same simple system and build your daily routine around it. And if it doesn't work, at least we will have real data showing that this idea wasn't worth continuing. Thank you for watching until the end. If you enjoy this type of content and want to follow my progress week by week, make sure to subscribe to the channel. And if you found this video helpful, don't forget to leave a like. See you in the next video.